Let's get the read on all of this with Rosecliff founder Mike Murphy. We've got Small Business and Entrepreneur Council President Karen Kerrigan, and last but not least, Dow Jones Newswire's Chief Editor Glenn Hall. Karen, it was an unusual venue for the Federal Reserve Chairman to essentially say, I'm trying to do my job, I'm ignoring the noise, the political pressure, but he must feel it, right? He must feel it because even, smart folks like yourselves are saying, you overdid it when you hiked, and now you have to dial that back. So everything he does risks looking like it's bending to political pressure, doesn't it?
Right. I think he did a great job. I mean, I thought he was a straight shooter, and he just sort of delivered the facts. But I also found a very interesting little zinger there, like you said, like, we're the ones that are keeping the economy going. And
saying that recovery is into its 11th year, which long precedes this president.
That's right. And entrepreneurs, investors, business people would, they would sort of take issue with that. But it's interesting. I know we expect the rate cut, the quarter-point rate cut. But, in listening to him, and if that wasn't sort of a predetermined decision, I would have thought, well, gosh, maybe he won't cut rates, given that he's talking about how strong the economy, it's in good shape.
Well, I definitely got that impression. That's why the Marguerite asked, right, when he sort of said, you kind of know what's coming on the 17th and 18th, the two-day FOMC meeting. But I did get the same feeling, Karen, that he don't expect a lot more of these. Now I'm making that leap, but that was my impression.
Yes, and that was mine as well. So,
Mike, when you hear all of this, he's really facing a conundrum. That is, look, normally we try, with the rate hikes we're doing, to get ahead of the inflation genie. Now, you almost want to bring it back a little bit. Keeping to 2% means also lifting it to the point that you can. It's a weird position.
It is a weird position, and I think if you look back, maybe there were some mistakes made here, but I think now what you're getting, and the reason the market's reacting favorably, is we're going to get a 25 basis point cut from the Fed. Minimum, probably just 25 basis points this month, and then they're going to be more data dependent. So if we don't see inflation spiking up, they're going to continue to be accommodative, and that is positive. If you take a strong economy and extremely historically low interest rates, that's a good time to be an investor.
Glenn, looking at that and the fact that he would act as appropriate, that's come up a number of times. Appropriately, do what's appropriate. Again and again, I was just doing a quick search of his wording on this, and sometimes it's nebulous, but that appropriate comes up a lot. And I'm wondering what is appropriate. In other words, if we don't have a lot of wiggle room with interest rates where they are now. It's not as if typically when these start and the averages, the overnight bank lending rates at 5.5%, it's far less than half that right now, and people are wondering, all right, what else is in your wiggle room there, right?
Well, this language is it's carefully constructed, right? The idea being that we want you to know that we're prepared to act, and maybe even biased towards, but they want the wiggle room to decide when and how, right? And so I think they're really just being very cautious. And it makes sense, though, because if you think about all of the variables, Powell brought this up. Think about China trade and how that could suddenly change everything. There's another series of challenges in the global economy. So we're feeling good now about how we are in America, but what does it look like 2 weeks from now? That's a big unknown.
But don't you find it ironic? Now, the Federal Reserve, as he kept stipulating, guys, is, look, we have nothing to do with trade. We have to clean up the mess afterwards if something goes wrong. I think that's the gist of it. But we're not going to weigh in on this. So any trade question that came up, he kind of, waved aside. But one of the things, Karen, I got from him is that the appropriate remark, addressing that, and the criticism he gets from the White House, he's the president's backstop. He's the president's friend on this regard. And I know personal relationships can always be salty depending on the president and the Fed head at the time. But this one is particularly problematic, isn't it?
The relationship?
Yeah.
Well, it is. I'm particularly, I'll be interested to see what the president's tweets are after this, to see where they are in their relationship right now. But he is sort of the backstop in a sense. And, the key thing that that they've been really, and the Fed, and he continues to bring up time and again, and it is related to trade, is all about business investment, right? Where is business investment going to go? And the longer this uncertainty goes on in trade, that continues to sort of suck business investment.
Right. And the uncertainty around it. It feeds that narrative.
We've heard that over and over again in the earnings calls and investor calls lately, where executives are saying, we're just not sure how to act right now. And that caution is slowing their spending.
But
Yes.
didn't the same one the president finger and say a lot of them are using it as an excuse?
Like they used to use the weather, and now
Right.
they're using the tariffs or the trade war.
Right.
The good CEOs, the good companies are performing. Look at the earnings that are coming out. So if you're invested in a company and they're saying, well, we're not doing well because of the trade war with China, you really want to look a little bit deeper, because there are companies that are performing right now in this current environment.
All right, guys, we're going to take a quick break here, pay our bills. Again, we thought we owed it to you to hear from the chairman of the Federal Reserve, get his take on things, because a lot of people say whether you agree or disagree with what he's doing, he's going to kind of be the last financial adult standing in the room to address this. And whether you think that he overdid it by hiking and now he has to do a 180 and reverse that, has been reversing that, the question then becomes how far does he go? And as we've been saying here, waiting for tweets from the president, whether he is going to go far enough. There's just no way of knowing. Then there's that added factor. Karen got into this, all the guests did, about trade and where we are with China. And to add some sort of drama to that, Hong Kong. There's another protest. We're heading into our 23rd weekend of planned protest. That is a lot of noise. And for folks like central bankers, a lot of worry after this. All right, more protests going on right now. These aren't live, but just a little more than an hour ago when we had protests that were extending, we're told, into a 23rd weekend there. And this was thought to ease up when Caroline, the administrator in Hong Kong, had gotten rid of that extradition order where, if you're arrested in Hong Kong, they can heave you over to the mainland. And, of course, that was what started this and erupted. And then she shelved that. But they're still protesting. They have a host of other demands here. And it's all that uncertainty that prompted the folks at Finch Ratings, a debt rating firm, to slightly nick Hong Kong's credit rating a single notch to AA from AA1, to confirm the obvious, that things are uncertain, and that adds to the financial uncertainty itself. All right, the Wall Street Journal editorial board member Dan Henninger joining us now along with my guest. But Dan, the fact that this is still going on, and we're only a few weeks away from the 70th anniversary of the communist state in China, so to speak, they don't have a lot of time to resolve this. Are they going to resolve it?
It's hard to see that they're going to resolve it, Neil, given the way the protesters in Hong Kong are insisting that they've put down a marker that they want the mainland Chinese in Beijing to respect their independence, to respect their freedom. And there's no evidence that they're going to do that. I mean, something really enormous is at stake here. You mentioned this October 1st anniversary, the 70th anniversary of the Communist Party. What is in play here is a competition between the basic mainland Chinese communist model of control of the billion people who live there and the Hong Kong model of independence and freedom for the people who live in Hong Kong. That was always going to be at stake as they tried to resolve whether the Hong Kong, agreement that they had made with the UK 3 decades ago was going to be honored. And now these young people in Hong Kong have just put down this marker to say, we're insisting that you honor the agreement you made with the Brits back then and let our freedom persist. And I don't think Xi Jinping is going to be able to do that.
Mike Murphy's with us here. Mike.
Hey, Dan, it's Mike. I had a question. When you look at the trade war between the U.S. and China, it seems as though the protests, the more they heat up in Hong Kong, it kind of plays right into President Trump's hand as it forces the Chinese to look closer to home and maybe take their eye off the fight here against the U.S. Am I reading that right?
Well, I think that the trade war is inextricably being pulled into this now. Xi Jinping has got both trying to deal with Donald Trump on the one hand and keeping his economy going. And make no mistake, the Chinese model depends heavily on creating jobs over there. So they has got to figure out a way to get the Hong Kong thing off the table and get back to resolving the trade disagreement with Donald Trump. They have somehow got to pull the extradition bill, which was a political disaster, pull that back and somehow make a concession, I think, to the Hong Kong people. I really, honestly, Mike, do not know how this gets resolved because as I just said, the basic Chinese model of control and command is under pressure now from Hong Kong. And with the run-up to this October 1st anniversary, in which the Chinese are going to be celebrating what they've done in that country for the last 70 years, I just don't see how this is resolvable. And I think it may impede the possibility of getting that trade agreement. And we've seen how the stock market is just reacting like a hair trigger to the possibility that a trade agreement could be done between Mr. Trump and Xi Jinping. I don't see it happening right now.
You know, Glenn, you could look at this as well, I think, as you did, that it's a separate issue. No, you're saying that, but that the president, outside of saying he hopes the Chinese act humanely, treat the protesters humanely, he has not made this a central cause or brought it into the talks. How does that play out?
Yeah, this is an area where we've seen some caution there, right? A little bit of, don't cross this line way over here. But
yeah, we got to watch that. Right?
Not getting
the line thing.
Not getting too hard lined about it, so to speak.
Right.
And so I think it is a challenge because he wants, as the president, he wants to make sure he's standing up for democracy and the independence of Hong Kong. On the other hand, he wants to get this deal. He's got a lot riding on getting this deal, and our economy, as we were talking about, has a lot riding on this deal.
He has been arguing, Karen, that as the president for some time, that China needs a deal more than we do. Now, this is a week we had mixed data. This employment report today still very good. I'm not knocking it, but it does represent a slowdown. Job growth now is averaging a little over 150,000 new workers every month, from in excess of 215,000 a year ago. So that it's slowing. Now, I'm not saying China's on fire here, but their services sector rebounded in a big way, the highest numbers we've seen there in a couple of years, 3 months in a row of such growth. So I'm wondering if we're seeing a role reversal here. What do you think?
Well, I think if there's no deal, it's a lose-lose situation for China.
So both get burned.
Oh, yeah, I think we both get burned. I think it's showing up in their economy. It's showing in our economy, and the uncertainty in general, the market, the pullback in business investment. And one thing I was going to ask Dan, Carrie Lam, the leadership. Is that something that perhaps can be changed? Because I think everyone thinks she's not doing a great job, even the pro-Beijing supporters there. In Hong Kong. She thinks she's doing an awesome job, and she, lashed out at Finch in terms of the downgrade. But do you think any
Should
type?
she have been surprised?
I don't know. She's not. She's living in a different world, in a different Hong Kong, for sure. Because she said, "Hey, we're doing all we can to firm up the one country, two system." Yeah, I mean, in terms of if there's something they could do in terms of or will they do any type of change in leadership?
Well, Carrie Lam. Yeah. I mean, Carrie Lam. There's a good question just how independent she's acting at the moment. I mean, I don't think anyone should think that Carrie Lam is really in charge of the Hong Kong police right now. That's a Chinese operation.
Yes.
Now, certainly Carrie Lam could resign on principle and step down, which would probably lead to other resignations as well, which would put tremendous pressure on Xi Jinping to come to terms with these protesters, right?
What if he's not letting her step down?
Well, that's her choice. I mean, it would be an act of extraordinary courage for her to step down, for sure. But she has gotten to the point where she's, between the devil and the deep blue sea, literally here. And I just don't see how she can continue in this role, just trying to sustain a kind of balance between Beijing and these protesters in the street, who obviously are now. No one ever expected, Neil, that those protesters, those kids really, would sustain this for as long as they have. And it's been extraordinarily courageous on their part. And at some point, Carrie Lam has to decide which side is she on, Beijing or her colleagues, her the fellow citizens in Hong Kong.
Where do you think this goes? Because if our markets were panicking about this, even if the Chinese markets were panicking about it, they have a funny way of showing it.
Yeah.
So this to them seems to be resolvable. Maybe to our own markets resolvable. So we always go back to the prospects of a trade deal and don't focus on the craziness there in Hong Kong.
I mean, it's a big deal, the protests going on, but from an investing standpoint, you've seen protests in Greece, you've seen protests here in the United States, you see protests all around the world, and with the media coverage and with social media now, you get them real time, a live feed of what's happening.
You don't get that in China. The Chinese in the mainland aren't getting the same video.
I mean more from a standpoint of protests affecting an investor here in the United States watching your show. I don't think it has, at this point in time, it has no impact whatsoever.
What do you think, Lynn?
The impact that it could have is if it turns violent in some way, or if we see a more overt sign from the Chinese that they're going to change the standard of
You don't see
one
that
country,
happening,
two
right?
systems.
You don't see
right?
that happening. They won't pull the trigger. I don't mean to crassly use that analogy, but you don't see that. It's not a Tiananmen Square deal.
It doesn't feel like that kind of a thing. They've been very patient and been trying to allow it to wind it down. But as Dan was saying, nobody expected it to run this long, and it still seems to have some strength. But there's a lot that they don't want to see happen before they get to their celebration.
We get a trade deal before the election. What do you think?
Before the election? I think so, before the election. Yeah, hopefully before the end of the year.
All right, Dan, quick thought on that. What do you think? A trade deal doable still before the election?
I think it is doable because both sides really need it. Donald Trump, the economy is slowing, and I think if he's going to sustain that economy, he's got to get this deal with Xi Jinping one way or another.
All right. I want to thank everybody. Very patient with a lot of the breaking news and these comments, but we did want to bring and share with you live because they're that significant here. But again, the chairman of the Federal Reserve telegraphing he's going to be doing something. He's going to be acting appropriately, which we've heard a term used ad nauseum here. And that seems to indicate a quarter-point cut of rates is coming. Anyone's guess as to whether it could be bigger or more down the road. But responding to a globe right now where deflation is the issue, not inflation. And right now, the hope is that they can just contain that.